Good afternoon, and now it's um, almost 2 minutes before the market close for this Friday. Also, Friday, September 23rd. 22nd, 2023. And it's a Friday afternoon, and market's about to close. And you see that the sell-offs intensify. You see a lot of sell right there. Huge volume coming and sell. So that means that people panic. They don't want to hold the stock over the weekend. That's the reason why they sell them. They dump them. You see that sell volume coming. 2,300 lot. One lot is 100 share. 52 right now is sitting. We only filter like above 200 lot. That's the reason why you saw sometimes the data is kind of delay right there, right? We are 50 close, so it's about 8-minute delay. The reason delay because we don't want to show order small lot. We just show that any order above 200 lot, the size above 200. So the last big one is not coming in yet. So let's see. So wow, last sale is 52. 8 minutes before. No, 14. How so? Like an hour. It's 14 now, 16 now. Let me see time. Okay. Now we can see. Yeah, we have to short the time. Somehow we put the later time in the bottom. I have to put later time first so we can see that. So our last sell is still running because after the market. So look at So how do we look back from today, right? First look at the 4-hour time frame. We can see the setup play out. Okay, so right here we have the key level is June low, right? June 26. In the summer is the June low. It broke that June low and it tried to recover, to make a retracement. And any trade we try to play, it's gonna be a retracement play, and you have to get out. Otherwise, you have to pay the price for the trend follower right there, right? This is trade retracement, and then keep following the trend right there. So if we want to play the trade for the retracement trade, then we have to precisely, take our profits at a pre-location or predefined location or target. Otherwise, we get, stop out because the trend follower gonna continue. Right? Wow. What is that? Look at that. How is that possible? What? So why it jump all the way to what? 33. You see, $33 up. Wow. What's a phenomenal. Look at that. Do you see that? 43. Who buy that? 10,000. Can you believe that? Who paid $3? That's me. There are lots of people short right there, and they put a stop loss there. That's where it go and get them. You see? Did you saw that? We see right here. $32. And then I saw another one is, we're gonna look at a tab, right? We record, right? So basically, whoever don't close the trade, put their stop loss right here, right? They get stop out. Execute them. It trigger the order right there. Wow, that means they lose the huge profit. $3 profit it's gone. Oh yeah, you see that? They sell $1 million. Oh, I mean 1 million lot. Then you know how much is that? It's 10 million share right there. Wow, look at that. And another sale right there. That's a huge sale order. Man. Wow. Ooh. Wow. That's amazing. That thing happened. You see right there. So let's say you sell right here, right? And then when it go down here 29, you didn't take your profit because you know you believe that you're gonna get more. However, in the last minutes, you know, and you don't execute your trade, boom, it gets you out, stop you out right there. You lost. Instead of, you know, gain $4, $3 right there, you got stop out. Look at that. Stop out for 35 cents. That's a lot right there. Let's say you have 1 million share right there. It's 35 cents. So just do simple math, say 1,000 share and 35 cents. So you lost $350,000 right there, right? Yeah, look at that. So 35 cents. Let's say you have 1 million share. Yep, you lost $250,000 right there. Instead of what? Instead of the profits, you have I don't know, right here, right from 30, not 30, even 30. Right here is, what's the price right here? 33 and 29. So 33, 29, about $4. Let's go conservatively, you know. Let's say $3.50, right? Time 1 million share. Huge. So you have, instead of profit 3.5 million. Yeah, 3.5 million. Look at that. Instead of profits this much, and you don't, you know, you don't take the profits, you don't take your unrealized profits, you get lost. You lost $250 instead of get 3 million share right there. That's how the market maker or the algorithm this, you know, operate right there. Amazing. We don't see that on the QQQ. It's only on the SPY. You see, you only see on the SPY on the last 15 minutes after the close. You don't see it on the QQQ. It only happened on the 3 minutes after the close. Yeah, I guess it's the huge short right there. The last people who short that didn't take their profits. Instead take profit $3 million. I mean, $3.5 million. They lost $350,000 right there. Man, that's amazing. But anyway, let's move it over another one. Let's look at the charts, without and you know that on Friday a lot of people place their order on Friday. That's their strategy, their model, or their trade system, especially people who play option or do position trading or swing trade. They enter their order on Friday. The reason they trade on Friday, I forgot the reason, but next time I will do more research to provide the information. I forgot the rationale, but I did know. At least, I read the book, listen to the audiobook, and some of the option trading or even swing trade or position trade, they try to enter the position on Friday. And that's the reason why you see somehow on the Friday, the last minutes or after the hour, it really swing well. Yeah, maybe right here. Someone try to sell, but no one buy. Or someone go buy in a huge order, they want to buy it. Then it bring bucket quickly right there. No one. Yeah. Maybe the order is huge. That's the reason why you have to go up here to grab this buy sell liquidity in order to fill that order. That's how you may interpret right there. Huge buy order right at 03. Put the price, go up within that minute. $3 up right there. You see open right here, 30 and 30 right there. That explains why it jumped so high. Yep. But anyway, let's review the trade we saw today, right? And today is a Friday. So basically for this week, we saw Monday, the first candle up close, the second candle is down close, right? And today we see the London in the consolidation. In the London is in a very tight range consolidation. And we saw the Asia, which is the after the market, they got ADR after market defined range high was taken, and then we have a London high, which is the ODR, which is overnight defined range taken, and we have a question mark that Monday is the high, it's the week high. It's another, it's correct. And we also see the June 26 low or sell liquidity were rated, and it's still in the priority range, right? Let's see, it's still in the priority range. No, it no longer still in the priority range. It broke the priority range in the low by what time? Okay, look at the 5 minutes time frame will give us an idea. So the priority low right here at this level, right? So it broke this level to the outside. At 1410, it broke it out, and then it's retracement, and then it go down again. So 1450. So Friday low, taken at was taken or broken, right? 12, right? 12. Yeah, this level, okay. Yeah, this level like that. 1210. Yeah, let's check the screenshot. What we want to say. So say right here, Friday low, broken or taken for that matter, as 12.15. So it tell you right there, and you see right here it trapped a sell-side liquidity, and then it make a retracement and go down. It takes sell-side liquidity again, and it you see that it valid the short right there. You see the swing low right here. It's our bearish breaker right there. Let's take a look. What a low of this one? 55. Maybe this one 54. Oh, you see that? The low is 55. This low is 56. That means that it trapped this sell-side liquidity right there. You see that? It trapped this and it go up, it take all the buy-side liquidity, but it respect this swing low, which has become a what? A bearish breaker, or another term is called resistance level right there, right? So if you mark this is a resistance level, then it respect that. It valid the short setup, so you can go and short them as soon as you see that it trapped the sell-side liquidity right here, right? Yeah, it's a classical short setup right there. Okay, we will go back to this setup later, but we should go back to our train of thought right there, right? right before it opened, we see that the market, the price still in the Friday range, but it broke that, that Friday range in the downside at 12:10. I mean 14:10 with the 2:10 p.m. Eastern time right there. And another, observation, we see that the London high, break London high at 10:05 right there. So London high right here, it break the 10:05 right there. We just observe that, right? The reason why we want to observe this, so we know that if we want to go long, then we have to make sure that by 10 or around 10, it have to break through the London high. Then our long setup will be valid. Because yesterday, after 10, and we try to go long, and the location is way below the London low, that will be not valid. That will be not valid. It will be the downtrend day, and that's the lesson we learned from yesterday right there. Yeah, let's open that note so we can review one more time. Here's the note we know on yesterday, right? Friday or Thursday. We go long. You remember we go long at 10:51, 59, 30, and they ought to now. It give a short run, right? It have profits, but if we never hit our target, it's just a short retracement and it continue to go down for the whole day. The reason that was that because we didn't pay attention to the contact. Even though we have a setup, but the contact is not right. By 10 a.m., if we see that it's still below the London or the OD hollow, then do not go long. Right, that's the idea the observation that we saw right there. That lesson we learned. And look at today, right? Today about 10, after 10, we see that it's above the London low right there. Actually, it break to the London high at 10:05. So it gives us a confidence to go in. At 10:15 right here, we saw it's just a retracement. We can go in at around 10:15 and set our target going to be at least this. I think we set right there. This target I think is 1 hour. 1 hour auto block right there, and this is target for 4 hour time frame. But conservatively, it's gonna go take it by side liquidity, and it did. Okay, let's go back to the 1 minute time frame, right? So we see why we go long today without get stop out like yesterday. Okay, before we can go long, because we see that it break out of the London, break out London high, not even London low, but it way above London high at 10:05 right there. So for sure, it's okay for it to go long right here, and we can catch this move right there, and we can get out, because we play this trade back on the idea that the retracement is gonna happen, and we're gonna take profit, get out, because the retracement is a sure move, and whether the retracement gonna turn into reversal up, that's another story later. But our job is try to catch the retracement move. Then we have to identify what is the high property targets for to get out. You can use that based on the high time frame, 1 hour time frame, or the 4 hour time frame. I mean, look at the 1 hour time frame to see our target is hit or not, right? Right here is our time frame, right? So let's look at the 1 hour time frame. So basically we see it's one swing right here, and then today basically it's gonna be in this range. Maybe it retrace and then swing down, take the buy side liquidity, and that's what happened. And how do we target the retracement? Right, we know that. Let me remove. Okay, so we know that it's gonna hit this, you know, auto block, right? Auto block, fair gap, boom, going down, and this is a retest. Retest, they're gonna be a retest. So we mark the open of this, right? We have to put right here so we can go back to the 1 minute time frame. We know what our target. So basically it is a bearish auto block open, okay, and it's the 1 hour time frame. Okay, let make it a little bit bigger so we can see. Okay, so now go back to our right here. So we target right there. We target this. That's exactly we put right there. So we put $1.37, and we're going right here. Okay, so let's put right there. On way and on the right. So we read 35 cents and on the right, okay, yeah, so that's our entry right there. Auto block, fair gap, retest, and we see that it trapped the buy side, take the buy side up here, but it still trapped this buy side, so it's gonna take that buy side right there. And after I take this buy side, it will want to retest this, and then boom. You don't want it to break this one. Okay, as soon as you break this one, you have to get out of the trade, don't stay. That's the plan we have. Okay, now go back to the trade, right? Okay, so the trade is short setup, right? And how do we see that short setup forming? So basically we either go right here at 18 or we will go to 16 right there. So we'll have auto block right here, auto block. After I take the sell side liquidity rate, sell side liquidity, that's beautiful right there, and you have buy side liquidity trap right here, and also the high time frame bearish auto block or supply, you know, supply level or support level right there up there. Okay, we can either enter at 16 or 18, 10 ending. So we have a choice right here. And our stop loss have to be 5 cents below this one. So you want to trade entry as close to your stop loss as possible right there. That's an idea. Whenever you see it, I mean, you have to put the contact, right? It's not always like that, but the contact that we bet today is going to be retracement today. Yesterday, you know, whenever we see it like this, let make it like this, okay? Whenever you see the sell side liquidity trap one, trap twice, and then it sweep those two buy side liquidity, and it go up, it take the buy side liquidity but still trap this one, and this move break through the London. Remember, we have to put that in context. This move have to be happen about 10 o'clock, and it have to break the London low. In this case, break through the London high even better. Then we know that the retracement down here is a good entry to go long. It didn't happen yesterday because the contact yesterday is completely different. The contact of yesterday, that the move high here is completely, below the London low. So we have to put that in context. Right, so this is the huge value we learned from this trade. We run out of time. 30 minutes is not enough, but I don't want to keep too long. But we have to say something right here, so it helps us to identify, when is this market structure shift, or when it's just it depends on the market context. So okay, so basically by 10, right, around 10, the price must break at least the London, or so-called overnight, right, DR low. At least, right? But if it break out the high, then the best, right? It's the best right there. If that condition, then we can engage long on the retest of the bullish order block, right? Bullish order block right here, right? Bullish order block. Where the last swing high came from. A little bit lengthy, but we will solidify this verbiage later, but you got an idea, right? So when it retests the order block where it make the swing high, that rate buy sell liquidity, then it's okay to go in on the retest right there. It's not like the day before we engage right here and we get stop out, because the contact yesterday different. The swing high right here did not happen by 10, and when it happened, it not even touched the London low. That's the reason why the trade yesterday fell. Let's look one more time and we wrap up right here. Okay, let's look at the 5 minutes time frame. So we go over 4 minutes now, so but just bear with me, I try to keep it short. You see the idea right there? So we go long yesterday right here. Hold on. Let me turn off the fair value gap for now. It's hard to see. Okay, so you see that at the retracement here we go long. All right. The mistake we make is that we go long, but the swing high before that it happened at 10, 15, and it way below London low. If this swing high above like this, break through London high like today, then the retracement is valid to go along, right? but on Thursday it's wave low. So we learned the lesson that we will not do that. We will not take a long. If the swing high around 10 did not go through, break through the London low, the better is London high, but at least the London low give us some indicator that the market gonna go up and grab buy side liquidity. Anyway, I hope that helped to clear out some confusion right there. I think it's a great lesson. All right, talk to you later. Bye for now. Have a great weekend. And happy trading. Bye for now.